JPMorgan Private Bank has released their global investments outlook for 2024. To give us some insight into what investors should consider in today's new interest rate environment, we're joined by Chief Investment Strategist at JPMorgan Private Bank, Tom Kennedy. Welcome.
Hi, Jackie. Thanks for having me.
So, Tom, overall, what can investors expect this year?
I think to set the stage for 2024, we actually have to look back to 2023. And 2023 really defied expectations. When we came into the year, economists, or at least most of them, were expecting a recession. And sure enough, we haven't had that, despite a hiking cycle from the Fed that rivals anything we've seen from them since the 1980s. So as we start to look into 2024, we're walking into a world where we've gone through a rate reset. Interest rates are now at levels we haven't seen in about 15 years. And we need our clients to reconfigure their investment strategy. 2024 is most likely to be a world where inflation is falling, growth is going to be a little bit more resilient, and interest rates are likely to come down. And that landscape is the opposite of what we experienced in 2023.
And going off of that, what are some other opportunities investors should keep in mind?
A reconfigured world for our clients has to start with cash. We've seen an accumulation in cash in our community over the last 2 years, and Jackie, it's been the right trade. But cash really works the best in a world where interest rates are rising and growth is falling. And in 2024, we're expecting exactly the opposite. The Fed has controlled inflation, so they should be cutting rates and supporting growth. So cash shouldn't be a top performer there. So the first is a recognition or a mindfulness about how much cash you have, and will that help you reach your financial goals? I think for many of our clients, they're going to see cash is not the best option for them relative to their goals, and they can consider rotating into fixed income and or into cash. So on the fixed income side, what's really interesting is 4 out of 5 clients haven't changed their fixed income allocation despite rates being higher. So there are simple things we can do, like take cash and move into a municipal bond for a taxpayer in America, or maybe an investment grade bond for someone that doesn't pay taxes. These are low default risk instruments with yields that rival historic equity-like returns. And then on the equity side, growth should inflect higher. It should support earnings for corporations. And really the most exciting piece for us is the AI investing age is now. AI buzz is picking up, but it's also picking up at the CEO and corporate level. In Q3 of 2023, over 50% of CEOs mentioned AI in their earnings calls. That's up from about 17% in 2022. So demand is there. It's suggestive that people want AI computing power. And the big tech names, we're seeing them do CapEx, and we think it will translate to earnings very quickly. This is an exciting time. So those two ideas, I think, are the primary focal point for an investing reconfigured world.
Wow, very interesting. Now, taking a look at a global standpoint, what are some other bright spots outside of the US market?
Those, I think, all translate down to the post-COVID world where we saw supply chains become shocked and now trying to deglobalize. How can I add resilience to my company in the unfortunate event we see something similar? I think the big beneficiaries there are India and Mexico, where we're seeing corporations move some of their supply chains. India is a one to focus on for a second. We're seeing demographic changes there that suggest economic growth will be high and inflecting higher in the future, and a legal system that allows those earnings to accrue to shareholders creates a really interesting opportunity set for long-term investors outside the US.
A lot of great information there. Tom Kennedy, Chief Investment Strategist at JPMorgan Private Bank. Thank you so much for being here today.
Thank you, Jackie.